Welcome to the Deep Dive, your essential guide for navigating these quarterly earnings calls. Today, we're zeroing in on BitFuFu Inc. That's Q2 2025, their financials, and their strategic update. Our mission really is to pull out the key takeaways, help you understand what's driving the performance, and get a grip on the big initiatives shaping their future in crypto mining.
Exactly. We'll break down, what drove the numbers this quarter, what management's really focused on, and crucially, what it all means for you, especially if you're looking at the broader digital asset space. It's quite a look at a company adapting, I think.
Okay, so let's kick things off with the headline numbers. Got to start there.
Yeah.
BitFuFu reported a GAAP diluted EPS of $0.28, but maybe more notably, a non-GAAP EPS of $0.09. And that 9 cents, well, it pretty impressively beat the consensus estimate. That was zeros and six.
Yeah, a solid beat on the bottom line. But what's fascinating here is while they delivered that earnings beat, the revenue that came in at $115.4 million, which was actually a miss compared to what analysts were expecting, and it's also down year over year. However, and this is key, it was a really strong sequential increase from Q1. Shows momentum building back.
Right, that sequential jump is important context. And despite that revenue picture, the company pulled off a robust adjusted EBITDA, $60.7 million. That's a huge increase from the prior year. And their net income surged to $47.1 million. Big number there. Mostly, though, helped by a pretty substantial unrealized gain on their Bitcoin holdings.
Right. And this really highlights the kind of duality of their performance this quarter, doesn't it? You've got strong profitability, good operational efficiency, but the top line, the revenue, didn't quite hit what the market was forecast.
Okay, let's unpack this a bit more then. That $115.4 million in Q2 revenue. Yeah, it missed consensus by about 6.7%, down 10.8% year over year. But like you said, that 47.9% sequential increase from Q1, that rebound is really key here.
That rebound is definitely important. Shows they bounce back. Now, that net income figure, $47.1 million, that's a striking jump from just $1.3 million a year ago. Huge difference. But it's critical for you to understand that $39.6 million of that, nearly $40 million, was an unrealized fair value gain from their Bitcoin holdings.
Right, a paper gain.
Exactly. So it's a non-cash accounting adjustment, but it significantly boosted that bottom line number. Shows how much Bitcoin's price matters to them.
Okay, looking at where the revenue actually came from.
Yeah.
The mix. Cloud mining was absolutely the dominant force. It accounted for, 81.7% of total revenue, $94.3 million. And that segment showed really impressive growth, up 22.3% year over year, and a massive 75.6% jump just from Q1. And what I found really striking was that new customers, they brought in about 51% of that cloud mining revenue.
That's interesting. Half from new customers. So this raises a pretty important question, I think. What does that tell us about how their business model is evolving? Is this a fundamental shift?
Seems like it could be.
Well, self-mining chipped in $14.8 million. That's about 12.8% of the total revenue. And mining equipment sales added another $5.2 million. But yeah, the clear shift towards cloud mining making up over 80%, that really looks like a strategic pivot in action. Deliberate.
Okay, let's talk about management's take then. Strategic direction. They stated these Q2 results more than offset the impact of the 2024 Bitcoin halving and network difficulty. That's a bold claim. And they emphasize the strength of their strategic decisions, particularly fleet upgrades and expanding their hosting capacity.
Yeah, capacity expansion is definitely a core focus. You can see it in the numbers. They hit a record high, 36.2 exahashes per second EOHs in managed mining capacity by the end of Q2.
Okay.
And that went up again to 38.6 EHs by July 31st. And hosting capacity, similar story, new record, 728 megawatts MW at quarter end, then up again to 752 milliW in July. That signals pretty strong operational execution, doesn't it? They're building out fast.
It's definitely building. And they've been aggressive on the fleet upgrades too, buying over 20,000 new mining machines since the start of 2025, including about 10,000 of those Antminer S21 series machines, which are known for being really power efficient, low power consumption.
And that ties directly into their focus on cost control, which is, frankly, pretty impressive. The average electricity price for their own mining farms, it fell to, a remarkably low range, 3.6 to 4.2 cents per kilowatt hour.
Wow.
And get this, some of their African farm achieved prices as low as 3.14 cents.
3.14 cents.
Yeah, and they highlighted that the direct cost of mining one Bitcoin with their newest machines, those S21 XPs, is just $29,000.
$29,000. It's significantly below current market prices. Huge advantage.
Massive advantage.
And they're not stopping there with optimizing current ops. They're exploring this self-generated mining model, which means sourcing natural gas, deploying generators, places like North America, Africa, basically making their own cheap electricity. They even gave an example from Canada where natural gas prices could mean electricity costs under 1 cent per kilowatt hour.
Less than a cent.
Yeah, that's a potential long-term structural advantage. Game changer, potentially.
If we connect this to the bigger picture, I mean, this is a move towards becoming much more vertically integrated, right? A power generation and mining company, they're trying to proactively manage energy costs, not just react to market swings, control their destiny a bit more.
Very interesting strategic move. And another fascinating direction they talked about, exploring asset tokenization. Specifically combining real-world assets, RWA, with cloud hash rate. That sounds different.
It does, and it raises the question, what exactly is RWA in this context? We usually think of tokenizing things like bonds, gold, real estate. BitFuFu's angle is that Bitcoin hash rate itself and the Bitcoin it generates represent a similar kind of asset class. Standardized, predictable, sustainable in their view. So their vision is to structure and issue the income rights from that hash rate output as RWA tokens. Within a compliant framework, of course.
Tokenizing the hash rate income stream.
Yeah. The idea is this could massively improve liquidity for hash rate as an asset, attract institutional capital, kind of bridging the on-chain and off-chain markets. It's ambitious.
Very ambitious. Okay, what about guidance, outlook for the future? They didn't give specific numeric guidance for future quarters, did they?
No specific numbers, but management did point to continued growth in their operational capacity, which, lines up with those July figures we saw.
Consistent messaging there.
But what really stood out, I thought, was the company's very optimistic outlook on Bitcoin's price. The CEO basically said the current price, around $120,000, that isn't the peak for the year.
Oh, really?
Yeah, said it still has room to increase. And he cited forecasts from places like Standard Chartered, Bernstein, predicting Bitcoin could hit around $200,000 by the end of 2025.
$200 K Bitcoin by year-end 2025? That's bullish.
Very bullish.
And what's driving that optimism, according to them, they mentioned 3 key factors, right? One was continued capital flowing into the Bitcoin spot ETFs, over $50 billion since the start of 25.
Yep, ETF inflows.
That's big. 2, steady accumulation by institutions. Nearly 100 public companies now holding, over $1.5 billion in Bitcoin?
Institutional adoption, check.
And 3, obviously, the ongoing supply squeeze from the halving effect. Less new Bitcoin being created.
Basic supply and demand. Plus, they also mentioned favorable policies like that U.S. executive order allowing things like Bitcoin and 401k accounts. More potential buyers.
Okay, so putting it all together, what does this mean for you, the listener, the investor? BitFuFu's pivot to cloud mining, the aggressive cost control, the fleet upgrades, it seems to be helping them navigate these tighter post-halving economics pretty well, showing resilience.
Definitely showing resilience. And if we connect this to the market reaction, the stock popped initially pre-market, right? Like 9.3% up after the call.
Yeah, I saw that.
But then that enthusiasm cooled off quite a bit during the trading day. Stock actually closed down over 5%.
Quite a reversal.
Yeah, it suggests maybe a cautiously bullish view from analysts. Like they appreciate the capacity growth and the cloud demand, but maybe they're still tempered by that revenue miss and just the general sensitivity to Bitcoin's price swings. It's still volatile.
And the company's focus, becoming more of a service provider through cloud mining rather than just a pure miner, that could make it less exposed to the direct ups and downs of the mining cycle, couldn't it? A key differentiator to watch.
Absolutely. That's the strategic bet they seem to be making. So key things for you to monitor going forward. Keep an eye on their managed hash rate and hosting capacity expansion. Are they hitting their growth targets? Look for proof points on those electricity cost reduction efforts, especially the self-generated power projects. Is that actually working?
And the tokenization.
Yeah, and any real progress on those asset tokenization ideas? Is it just talk or is something happening? Oh, and their cloud mining retention rate. That net dollar retention, NDR, was 59.5%. Need to see if that holds up or improves. Shows customer stickiness.
Right. Good metric. And the main risks obviously remain those post-halving pressures on self-mining margins.
Yeah.
It's just the overall volatility of Bitcoin. Plus, execution risk on these big new strategies.
Execution is key. Big ambitions need big results.
Okay. Okay. All right. This is the part of the program where we have to remind you, this is purely for informational purposes, not financial advice. Always do your own research, consult a professional, you know the drill. But
Yeah.
if you're looking for a bold, maybe plausible trade idea, here's something to think about.
Okay, lay it on us. So, given BitFuFu's whole story, right? The big pivot to cloud mining, that really impressive cost control in self-mining, 29K per Bitcoin, and planting this flag in the RWA tokenization space, even if it's early days, a potential thesis, just something to consider, involves looking at BitFuFu versus maybe some other miners, maybe going long BitFuFu, ticker FUFU, while potentially shorting a basket of miners that seem more undifferentiated, pure play miners.
Or maybe a Bitcoin miner ETF, like WGMI, sort of a pairs trade concept.
Exactly, a relative value play.
And the thinking behind that.
Well, the rationale is kind of layered. First, if management is even directionally right about Bitcoin heading towards 200K, BitFuFu, with those super low mining costs and the big unrealized gain potential on their existing Bitcoin, they seem uniquely positioned to benefit massively.
More leverage to the upside, perhaps.
Yeah, potentially. And second, that RWA initiative, it's different. It offers a distinct potential upside. If it works, it could attract serious institutional money, create a new revenue stream that's maybe less tied to Bitcoin's price swings, that could make FUFU outperform peers who are just pure mining plays.
And that fade in the stock price after the initial pop, maybe that offers a tactical entry point for someone who believes in this long-term transformation story.
Could be. Again, just an idea to mull over, not advice.
Right. Definitely not advice. So let's sum up. BitFuFu's Q2 2025. It shows a company really in active transformation mode. They're navigating the post-halving world with that strong pivot to cloud mining, aggressive cost management, and these strategic bets on self-generated power and asset tokenization.
Yeah.
They could really define where they go next.
Yeah, the key takeaway for you is clear. Watch the execution. Can they deliver on these big plans? Capacity growth, hitting those low electricity costs, actually making progress on RWA. Those will be the crucial signs of whether this strategic shift is really working long term.
So here's a final thought for you to chew on. Could BitFuFu's moves, tokenizing hashrate, trying to vertically integrate with power generation, could this actually redefine what we even mean by a crypto miner? Could they transform into something more like a stable, diversified digital infrastructure company instead of just a proxy for Bitcoin's price?
It's certainly a provocative thought, and one we'll definitely be watching closely.
Thank you for joining us on The Deep Dive. Always appreciate you tuning in. Until next time, stay informed and keep digging into those earnings reports.